Hello, welcome for a quick review on GBPUSD. This chart before you is on the weekly time frame on the 22nd December 2023. The bearish version of the standard trading model is represented like this from the introduction of the previous videos, where we said we need a sweep of liquidity, first leg, first break of structure. At its higher high, right here is where you take an order and potentially to target this lower low in the long run. So right here we had a sweep of liquidity. Then the clearest first of break of structure that we can see, this is the first leg right there. First break of structure that we can is clear is right this guy. It's higher high right here. This dotted line is where now we are supposed to set our sell order to take profits of the nearest liquidities, but in the long run this lower low. But as you can see, this market is on the bullish. How do you confirm that? We see we are moving uptrend, a bigger displacement on the daily time frame, which left an FVG right here. So after leaving this FVG, we'll be expecting it to come and fill this imbalance of this FVG, and then rally up to take these high highs, as what has just happened. Then eventually we'll be moving for this liquidity which is lying right above here. Let's drop down time frame to see exactly what was happening at this zone here after this weekly FVG was filled. This one is on the daily time frame. So this sweep of liquidity, the first break of structure that we drew on the weekly is this guy right here, this dotted line, which took some liquidity right here. Right, you can see there was some liquidity that was taken there. Now we have to see what is happening there. Liquidity was taken, but when this market was rallying from the daily FVG, I believe it is around here, it rallied up, displaced, and leaving some daily FVG right here. Right, so the market came back to fill that FVG, and potentially we are targeting to take this liquidity because that FVG is already filled. Let's try to watch what was happening at this daily FVG, because this is where we said we look for our setup now. In this case, we are looking for a bullish version of the standard trading model represented like this. So let's drop down on the lower time frame, that is on the 4 hour. See exactly what was happening. This one is on the 4 hour time frame. This sweep of liquidity was from the weekly. I've refined it. Just as you can see. We had marked this guy from the weekly, but we see there was a high liquidity lying here after the first break of structure. So this one, consider that refinement, this guy here. So what we can see there, we said we have some daily FVG lying somewhere here, right? And we can see when this market was rolling up there, we see there was a sweep of liquidity right here. So that means we will be expecting on the bullish version of the standard trading model represented like this, right? We said we need a sweep of liquidity, first break of structure at its lower low. That's where you take our entry to potentially target these high highs in the long term. So when there was a sweep of liquidity here, we'll be dropped down on the lower time frame to find the first break of structure, which I think was around this place right here. So this is the place when this market was reversing back that we will have been anticipating a buy or a long. But let's first of all begin from the top. So this zone, this is where we were anticipating a sell. So it was hit. That liquidity was swept. And then there was some market was building some momentum over here. Many orders. There was a consolidation there. And the market rallied down. The first break of structure that is very clear is this guy. From the bearish version of the standard trading model, it represented like this. No, not that way. Not that way. This way. Oh. Yep, my drawing today is terrible. So we said we need a sweep of liquidity. First leg, right here. First break of structure. It's high. This is where you take your order and potentially target this lower low in the long run. But we can always, we can always take partials at this leg here. This leg right here. So this here, where this place we are anticipating ourselves. So the liquidity was swept. The market consolidated right here. Drop down. The very clearest first break of structure that we can see is this guy. It's high. This guy right here. This is where we said we take our order. We sell our sell order and our stop loss right above this place, and potentially targeting the nearest liquidity, which you can see the nearest liquidity on this 4-hour time frame. But you can always drop down on the lower time frames like the 1 hour, the 30 minutes, and find the nearest liquidity. But on the 4-hour time frame, and this is the guy that we could be targeting, printing our setup, our bearish version of the standard trading model. When this market was around here, so we were expecting a reaction of the market off of this first break of structure. We just have seen this market reacted of it. Let's say sweep of liquidity. Okay, let me drop down on the lower time frame to show you exactly what was happening at this zone right here. This one is on the 1 hour time frame. You can see this liquidity was from the weekly time frame. The first break of structures high, following the bearish version of the standard trading model. And we said the market consolidated a bit here. There was some liquidity here swept. I broke down this setup on some video. The market rallied up after the sweep of this liquidity. The clearest first break of structure that you can see is around this place, all this zone right here. It's just a first break of structure, but it's high that we can see with this guy. So we said, following the bearish version of the standard trading model, we always set our order at the high of the first break of structure after the sweep of liquidity and target potentially this lower lows, which we are seeing. This market just swept that liquidity, just hit that high for the first break of structure after the sweep of liquidity, and we rallied down. Take this lower lows. Ta-da. But again, this mark here was from the 4-hour time, as I showed you here. This right here, there was a sweep of liquidity, so we'll be anticipating some buy around here to find for the first break of structure. This zone here, you see the clearest first break of structure was right here, around here. Now it's lower low, which is right here. This is where we're supposed to take our order, and our stop loss right below this liquidity is here. The stronger low that was created after the sweep of this liquidity. This is the stop loss. And we said this is now according to the bullish version of the standard trading model. This guy here, a sweep of liquidity, first leg, first break of structure, it's lower low. This is where you take a buy order, potentially targeting this high. So the first break of structure, there was a sweep of liquidity, first break of structure, it's lower low right here. This is where we set our buy order. See, the market hit triggered our order, little bit of manipulation, but you can see our stop loss right here was not taken. The market rallied. You can always take profits at the partial, at the nearest liquidities right here. Take your money right there, but potentially this market rode and took liquidity at the top. Yes, you can also see still on this setup, you can see there was this guy here. This first break of structure's lower low, it was a sweep of liquidity connecting to the next trade right here. You can also see that after this sweep of liquidity and this manipulation, yep, this manipulation here, you can see the first break of structure was this guy here, right? Then the market structure shift right here makes this setup a high quality one. Then it's a lower low for this first break of structure with this guy. You can see the market just hit it, and we roll to the nearest liquidity. Take your money right there and get out. Don't overstay in the markets. Anything can happen. This one was following the bullish version of the standard trading model. Now, this market had said it came and took this liquidity, but we were expecting a reaction, a reversal of this zone, because on the daily time frame there was an FVG right here. Let's watch. Watch this. This is a daily FVG, so we'll be expecting a reversal of this pattern to take these high highs. So what happened after that? So what happened after this setup printed on the, depending on we were anticipating a sell on the weekly time frame. This guy here, this guy right here, this way we're anticipating a sell. So all this on the all this on the 1 hour time frame is a set that we are anticipating on the weekly time frame. So it has already occurred. First break of structure right here. Our target was mitigated just below here. So the only thinking that we are having right now, when the market was here, was now to take these high highs right above here. So we can see the market now, after the sweep of this liquidity right here, there was a manipulation, as obvious. Market sweeps liquidity, then manipulates first before moving to the opposite direction. So after this manipulation, we can see after this guy was taken, there was a market structure shift. All this guy up here, there was a market structure shift on the bigger picture, on the bigger time frame, because this one is the one that is visible on the 4-hour minute time frame. Market structure shift. We can see at this leg right here, the clearest first break of structure on this 1 hour time frame is this guy here, right? And its lower low is this guy here. So you set your order here, your stop loss right below here, and you rally this market potentially to take these high highs. Yeah, so this market is still has a long way to go. But you can also see right here, let me delete some things here so that I explain something here. I see this. Oh my, see this. There was a clear sweep of liquidity here. Then there was a first leg after this manipulation right here. First leg for the drop. Then the first break of structure that we can see is this guy here. Then its high is this guy. See, this first break of structure is this guy. See, the market is just reacting off of it, following this bearish version of the standard trading model. Sweep of liquidity, first leg, first break of structure, first leg, first break of structure. It's high right here. this guy here. This is where you take your order and potentially targeting this lower low in the long run. But we know our buys, we are bullish, so we can't wait to take this lower low. So we take partials on the nearest liquidity, take some money here and run. I'm very sure if you drop down on the lower time frame, this model printed, right, as I can see here. All right, this guy printed, yeah, the model printed on the lower time frame, and you take money at the nearest liquidity. As what we can even see here is that let me just close this door first and see. There were some noises out there, so I had just to close the door so that I can focus. We can see this bullish version. See, our model is supported by this FVGs right here. See the daily FVG. The market still moving right there. So as you can see, there's a sweep of liquidity right here, right? This flash here before this market rallied up to displace forming some FVG here, the 1 hour time frame. So after this sweep of liquidity, following the bullish version of the standard trading model, a sweep of liquidity, then a first break of structure. It's lower low. This is where you take your entry. Stop loss right above here. Take profit is here. So after the sweep of this liquidity, this flash here is a sweep of liquidity. So this guy becomes a stronger lower low. Drop down on the lower time frame. I'm very sure there is a first break of structure here, which this market came and hit before we rallied up to take this high. That is the thinking that we have, we should have in this trading. Just using one model for every trade that we take. But of course, I've broken down this GBPUSD from the higher time frame, and we can see there were several opportunities to take off of this market this week. This week of it's the week of holiday season, Christmas season. There were many setups, there were many opportunities to take advantage of. But of course, I said we should always look for the quality one. We can't trade all of this. We can't trade all of this. So we look for those high quality setups only. Yeah, like this one right here, sweep of liquidity. After manipulation, we can see this guy here. You see, there was a tight stop loss right here. Could have used a good lot size and roll this market the nearest liquidity. This one is good, but also on the longer time, on the higher time frame, on the weekly, we were anticipating a sell here. Yep. So this guy right here to take this lower low was a high quality setup to hit our take profits. With this guy, one of it. The next guy is this guy reversal to take this high, right? Is the next high probability setup or the quality setup that we always take. So that is that's enough. That is just for today. I just wanted to give a quick a breakdown on GBPUSD, and I have done it. So if you watch this video and you find it interesting or informative or enlightening, maybe it somehow, you can like the video. You want it to spread so that many people can be enlightened too. You can put a comment. If you don't have anything to comment, just put hashtag keep it simple, because that is exactly what we are doing in this channel. Just market structure and liquidity is enough. Plus a concept of FVGs, then that is a killer in this market. Yep, that is it. So hashtag keep it simple in the comments, or comment anything that you wish I should talk about, I should maybe improve on, and If you're new, you can subscribe to the channel, because that is we want our family to grow in one way or the other. Thank you so much for watching, and there's a long weekend. Today is a Friday. It's a long weekend. Christmas weekend. Yep. So I wish all of you a Merry Christmas for those of you who celebrate it. Thank you so much, and take care. Bye.